Welcome guys, today we're going to talk about the difference between a pre-qualification and a pre-approval. For those of you that don't know me, my name is Charlie Shammy. I'm the CEO of a mortgage company called Sonic Loans. We're headquartered in Michigan, but we're also in a bunch of other states. I've been doing this 11 years now. Over my career, I've been able to help over 14,000 clients. So I learned a thing or two about the mortgage process, and in specific, I deal with the purchase side of transactions a lot, so I know a thing or two about those. We hear a lot of people asking for a pre-approval, and then when we're asking for the required documents that we need, they'll tell us how this lender or that lender didn't ask them for that. So there's a lot of confusion in the marketplace about what a pre-qualification is and what a pre-approval is. Pre-qualification means you're pre-qualified and all the information still needs to be verified so you can be pre-approved. You'll get those letters in the mail from credit card companies, you'll get pre-qualifications from banks that say you're pre-qualified, but it really doesn't mean much. They may have like a soft check on your credit, or they track your credit or something along those lines, so you may be credit qualified, but they don't have a full credit report to review, they don't have your income documents or your asset documents. When they have those, that would mean it's a pre-approval. People confuse a pre-approval also with a verified approval. Verified means it went through underwriting and an underwriter already reviewed it. But let's stick to the pre-approval part. A pre-approval is as good as the loan officer that issued it. They'll review your full credit report, you'll send your income documents, and you'll send your asset documents. Those three things are reviewed, and then when you're putting an offer in on a home, they should be pulling up that home, pulling the taxes on the home, estimating insurance on it, looking at the condition to make sure it'll approve for whatever program you're going, whether it's FHA, VA, conventional. All of them have different property requirements. Also checking to make sure what the HOA dues are on that home, to make sure that you're eligible for that home, number one. Number two, that you know the numbers before you put the offer in. And that's when a pre-approval should be issued. So you can issue it without, we call it a TBD address, without an address, to be determined. And then when you find a house, you should be talking to your loan officer again, giving them the address, letting them know how much you want to offer on that home. And they should be able to pull up the taxes, estimate insurance, pull up HOA dues, and go over all those numbers with you. A pre-approval though, like I said, is only as good as the loan officer. So if, for example, on FHA, there's a little caveat in the guidelines to where, let's say you just started working somewhere 3 months ago, but over the last 2 years, you had a gap of employment of 6 months or more. It's typically fine, but on FHA, they would say you have to be at that job for 6 months. Some loan officers never ran into that. They wouldn't know, and they'll pre-approve you on an FHA loan. You'll get a house under contract, you'll pay for a private inspection, you'll pay for an appraisal, and then they'll say, oops, I didn't know. And you got to look for a solution. So the loan officer that you're working with should be experienced or have a team leader who's experienced that can review everything and make sure that you actually are pre-approved for this home. You're not going to go through any headaches. Make sure you provide all the documents they ask for so they can review them. If you have 2 months bank statements, all the programs require that. You got to make sure there's no large cash deposits in there. You can have all the large deposits you want as long as we can verify and source them. Those should be reviewed before the pre-approval, not after. So it only does you good to send those documents to make sure that you're going to be approved, and know that a lender doesn't have an obligation to lend. So just because a loan officer sent you a pre-approval doesn't mean they have to lend you that money. They're going to take that, and their underwriting team, if they work for a direct lender or if they're a broker on the wholesale side, whichever lender they send it to, that underwriting team will ultimately make that decision. So it's really important who you work with. That matters, and hopefully now you know the difference between a pre-qualification and a pre-approval. And if you really understand the difference, you should want a pre-approval, and you should want a pre-approval from a reputable loan officer who has been around, who understands the industry, understands the guidelines, and understands what works and what doesn't work, so they can guide you through it, coach you through it, and make sure that everything is, you pre-plan, you game plan for it, and everything is structured the right way from the beginning. That gives you the easiest process. Thank you guys. If you have any questions, you can always reach out to us, of course. Again, I said I'm the CEO of Sonic Loans. You can call us 313-488-4888. Whether you're doing a loan with us or not, if you want to just keep somebody honest, ask a question about something, feel free to give us a call.